And welcome back once again, options traders. I thought it would be a beneficial follow-on video here to show you some more insights into why we roll options. Now, in the last video, I talked about the highs, the whens, and the hows to roll an option, whether a call or a put. But I wanted to talk now a little bit about some deeper insights and why it can make a lot of sense to learn how to roll. Now, interestingly, this video also ties into another one that I did recently called Selling Pieces. So if you want to check that one out, it will help you to understand a little bit better what's going on here. But let's take a look at some of the deeper insights, why it will pay to roll your options. I'm going to start with an example, and let's just say that you buy a $50 call here in red. Now, I, on the other hand, I'm going to buy the 50-55 vertical spread, and then I'm going to buy the 55-60 vertical spread, and then the 60-65 vertical spread, and I just keep doing this forever. I just keep following these spreads all the way up. Well, mathematically, we're doing exactly the same things. Not counting commissions, but as far as understanding what's happening and the profit potentials in these strategies, we're doing the same things. The difference is that I'm taking $5 blocks or $5 increments of your unlimited potential gains. So again, step back and look at what's happening. You're taking one strategy where you can start profiting if the stock rises above 50, but you can profit forever. By my strategy, I can do the same thing. I can profit forever, but I'm just doing it in $5 increments. So that's the important insight. Now, vertical spreads are not the only strategy we could be doing this with. But for this video, I'm just going to focus on the vertical spreads. So let's take a look at graphically what's happening on your side. Your profit and loss diagram looks like this, which we've seen before, typical hockey stick diagram. I'm also going to change it. I know it looks a little odd because you can see your maximum loss over here is 0. And I'm just, to put everything on equal footing, I'm going to assume that none of these have any cost. We're just looking at the maximum potential for these strategies. So you can see from yours, it's very clear that if the stock gets above 50, look up here, you've got unlimited gains. Now let's overlay my 3 vertical spreads on top of this one. So to make it a little easier to see, I'm going to fade out everything except the 50-55 vertical spread in blue. So there's my 50-55 vertical. What about the 55-60? It's right there in orange. And what about the 60-65? It's right there in gray. So if we bring your strategy back on, take a look. My maximum points, or at least my initial point of maximum gain, lies right there exactly on your curve. So there are just 2 different ways of approaching the same idea. Now let's look at just your $50 call here in red and my 50-55 vertical spread in blue. But let's say that the stock has risen a bit at, let's say, 65. And we look on our broker's platform and we see that the 50-55 vertical spread is trading for, let's say, $4.90. It's almost the full $5 that it could ever be. Well, now you have to ask yourself, why do you want this as part of your strategy? Now remember, it's not actually something that you hold in your account. Remember, you're just long the $50 call. But in a sense, you are long the 50-55 and the 55-60 and the 60-65 and so on. Again, those are just some of the sub-pieces you can think of that single strategy. So if the 50-55 vertical spread is almost maxed out, remember the most it could ever be worth is 5, and it's trading for $4.90, why do we want that as part of the strategy? Why would you want that in there? Now again, you can't say, but I don't have the 50-55 vertical spread. That's true, but mathematically you're holding it. So again, this another way of looking at it is to say that this option has gone so deep in the money, your long $50 call, that it's really too deep in the money. We want to get rid of this 50-55 portion of that curve. So how would you do it? Well, you simply sell the 50-55 vertical spread. Now again, remember, don't get confused and say, but wait a minute, I don't have the 50-55 vertical spread. Well, again, mathematically you do. That's the point that I'm trying to make. It's a subcomponent of the long $50 call. So here's your long $50 call. If you place an order to sell the 50-55 vertical spread that you don't really want as part of your strategy, guess what happens? This is what we saw in the last video. The long $50 call cancels with the short $50 call, and you're just left with the long $55 call. So again, even though you didn't really have the 50-55 vertical spread in your account, the fact that you're holding a long $50 call and the fact that we can see that long $50 call as a series of vertical spreads should still give you an incentive to keep an eye on those valuations. And once that vertical spread gets pretty much maxed out, let's get rid of it, spin it out of the account. And we do that by selling the 50-55 vertical spread. Now, in the last video, I also said that the general rule was we sell if we can capture 80% of that difference. So if it's a $5 vertical spread like we're using here, 80% is $4. So why do we pick this 80% number? Well, it's arbitrary, but the idea is that at 80%, you've collected most of that possible gain. And if it's trading for $4, you have to ask yourself, does it make sense to initiate the 50-55 vertical spread for $4? Would you put on a trade right now and pay $4 to make $1, also considering bid-ask spreads, commissions, the fact that you're probably not going to get the full $5? You have to say that's starting to push the upper limit. Now, if you want to argue that and say, well, I think $4.30 would be a better number, or $4.50, that's fine. But the point is that you still have to face up to the fact that at some time, that 50-55 vertical spread is not doing you any good. And so the key insight that I want you to see is that rolling allows you to spin off portions of a strategy that can no longer contribute much of a gain, but could create losses. And if that's true, it makes sense to get them out of your account. Now, to really understand the art and science of options trading, you have to understand that there's not just vertical spreads that are a portion of this long $50 call. There's lots of strategies we could see. And if we can start spinning them out of the account, it's giving us things to trade where we can lock in some gains and get rid of a significant amount of losses. And that is the key reason why we like to roll. If you'd like to learn more about the art and science of options trading, please check out the Alpha Trader course and strategy lab at optionsa2z.com. Also, please join us on the Facebook trading group Options A to Z, and you can find a link in the description below.